Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Ethereum and its token ETH. None of the content is financial advice. Right now, the market cap of Ether is at around 221 billion. It's about 1.7 trillion away from Bitcoin's market cap at around 1.9 trillion. The volume for Ether is roughly speaking close to half or slightly more than half of Bitcoin's volume. Again, it's at around over here 25 billion for Bitcoin, 13 billion for Ether. The circulating supply for Ether is at 120 million. Price is at around $1,800. If we look at the current price and try to estimate what is the current risk level for Ether, that is available on SMA risk on cryptoweeklies.com. All of the content available for free. You don't have to pay or sign up for anything. The ETH risk over here is in this blue line. Right now the risks have come down quite a bit from at one point in December at around 63%. Now they are less than 20%. That means it's one of the best times to DCA ETH per this analysis. Bitcoin on the other hand is slightly elevated risk at around 37%. Again in December when ETH had 60% or 0.6 risk, Bitcoin's risk was 0.8. Now above 20% higher Bitcoin risk than ETH. If we look at the current machine learning based price forecast for ETH over the next 6 months in a non-euphoria bull case, by that I mean a 68th percentile bull case for ETH, the price in this scenario in the next 6 months could be between the current price at around $1,900 to 3K. Ethereum and its token ETH did have three tops at around 3,000, almost 4,000 level, 3,800 to 4,000 level. In the case of a two standard deviation bull case or euphoria case for ETH, the price in the next 6 months could be between 2K and about $4,600. A 99.7 percentile bull case or a three standard deviation bull case or you blow off top phase for forecast for ETH in the next 6 months per this model is between $2,300 and about $6,800. So that is the maximum permissible price action per this machine learning model for ETH in the next 6 months. Although if there is a continued downturn in the price could like it did from mid-December from $3,800 to now at one point at $1,500. If the downturn were to continue, the support for ETH is between $1,000 and $1,600. The purpose of this forecast is not to tell you if the price has to go up or down, but if it were to go up, how far can it go, how low can it go, using statistics and machine learning. If we were to focus on the fair value for ETH using regression based model, per this model the fair value for ETH is at around $3,800. That means ETH is undervalued, not just based on fair value but applying a one standard deviation residual on the fair value using this polynomial regression function, which helps identify in a non-linear fashion what's the fair value for ETH. In terms of what is the key level to watch, again there was a great support at the two standard deviation bottom at around $1,300 back in early April. Now that we're in early May of 2025, the support has gone up to about $1,400. The next key level to watch is at about $2,300. That's the one standard deviation residual to the downside. To the upside, if the prices were to go in a euphoria phase like they did back in early 2024 March, and also back in June July 2024, and again in December 2024. Back then the ceiling was at around 4,000. This time it's around 6,200. So a $6,200 ETH could be considered as overvalued as ETH was back in March 2024, where the prices did take a downturn from that one standard deviation rally. The prices have not made its way to the two standard deviation residual or the 95 percentile regression based overvaluation since about November 2021. So let's see if that two standard deviation were to pan out. If it were to pan out, the price of ETH could be at around $10,000. That's the forecast in a euphoria case for ETH. In terms of the current risk levels, its risk is at around about 10%. Again, using the same DCA model, a regression model based risk. The peak risk levels right now, again, that's dotted red line, that's where the euphoria phase starts, or whenever the price is coming really close to the dotted red line, that's where the color code of the risk levels you can see goes to that intermediate risk between 50% and 60% risk. Again, if we look at this model from this purpose of DC, again not financial advice, per this model, again whenever the risks are less than 10% historically speaking, DCA is not the worst idea. For example, June July 2022, and the price was sub $1,000. Again in November 2022 at around $1,100, and now in May 2025 the price at around 17 to $1,800. If we were to look at the bottom regression line, again the prices have come really close to that bottom regression line, the green zone, if you were to call it that, whenever the risk where the price is below this dotted green line. Again, that's a DCA signal per this model, per the DCA model. Again, if the risk were to go back to that 50 to 60% target per this model, the prices for it could be between $5,700 and about $6,500. So that's one way to anticipate what could be the price without any financial advice, using risk-based approach. But the SMA model, the simple 20-week simple moving average based model, the risks are slightly higher at about 20%. If they were to go back to that, again 50 to 60% price, the price for ETH could be per that model at between $3,700 and $4,000, roughly speaking. So that's a moderate forecast. Again, different models forecast things differently. The time weighted average price model did signal accumulation signal for ETH as well, where the price for briefly in April of 2025 went below the time weighted average price. The current time weighted average price is around $1,500. This model did anticipate a great entry point in the bear market of 2022 and November of 2022. So only handful number of time where the price is below the time weighted average price. Right now slightly above time weighted average price. That means the risk is not 0%, but this model it's at around 18%. Definitely not the worst time, but again the great time is when per the model is whenever the risks are close to zero, like they were in early April. Estimated bull run target for ETH, considering all the models, is at around $13,000. If all of the models were to go to that 100% risk, right now that are around 14% risk. If we take a 5x from the current price, that would be slightly more realistic, anticipating at around weighted risk to be at the peak at around 70%. That would be at around price at around $9,000. If you multiply 14 by 5, that you get that 0.7 risk. Again, roughly speaking, 1800 multiplied by 5 would be at around $9,000. So with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.